Snapchat's parent Snap plummeting 27% after disappointing revenue raised concerns about the outlook for online advertising. Meta, Alphabet and Pinterest all fell on the news. It was the second time in 2 months that Snap drove a tech sector sell-off. Joining us now is Alex Webb from Bloomberg Quick Take. Alex, what do the Snap results mean? You've been talking about this on the show, the risks around advertising and how we need to differentiate between those parts of the tech sector that are very exposed to advertising and those that are less exposed.
Yeah, so we know that in most economic slowdowns, the first thing that companies cut is their advertising marketing budget. So that's why we see the first impact hitting these sort of ad tech stocks, and we include in that, of course, Facebook and Google. Now, Facebook and Google are really at the top of the pyramid. Snap, a little bit further down, Twitter as well, somewhere around there. The thing is with Snap, of course, it trades at a really generous multiple. It trades at 145% before yesterday's earnings, 145 times forward earnings. So that means if there's any wrinkle in the growth story and it's valued as a growth stock, it will get punished. And that's exactly what's happening now. The actual growth in this quarter, they had reduced their earnings, their forecast a little bit. It wasn't as dramatic as all that. It was in the current quarter where they've said that it's flat compared to last year, and that is clearly not good.
And yet they're adding users.
Well, they are adding users, but equally, if people aren't spending to try to find those users, then it's kind of all moot. And, you know, TikTok is hoovering up a lot of attention right now. We don't have visibility into TikTok's numbers. They are also looking like they're maybe pushing back their planned IPO. We did have some news from TikTok that they're reporting from Bloomberg that the valuation at TikTok has been cut in private markets, essentially. So it's not at all rosy in that social media.